Hi everybody, I'm the Commercial Director here at NCAS. Welcome to today's webinar. Today we're going to be thinking about VAT in the light of last week's announcement by the Chancellor of the Exchequer that VAT for hospitality businesses is going to be cut from 20% to 5%. I'm joined with me today by Andrew James from the Catering Accounting Company. Hi Andrew.
Hello Dan, how are you?
I'm very well, thank you. You up for the challenge of trying to make VAT exciting and interesting, Andrew?
Oh, VAT, Dan, I'll tell you what, but let's be serious about it for a moment. It's probably the one area where most small businesses get picked up on by HMRC. So it's a very important area and we need to get it right.
Absolutely. But I think it's overall, it's a good news thing that we're going to be talking about today, how there's been a significant tax cut for a lot of independent hospitality businesses. It's going to make a big difference. Andrew, do you think?
I would say so, yeah. I mean, the government have been frightened to death about the financial impact of the virus. And the one area that, as we all know, is your sector that has been hit really badly, the hospitality sector. And what they're trying to do with this change is to give it a bit of a boost and to try and kickstart it so that we can all get back to enjoying hospitality and spending our money.
Yeah. So what I thought we'd do in today's webinar is obviously we've got the cut to talk about, and we're going to think about what that means and how people can get it, and and the impact that's going to have on people's businesses. I thought to begin with, what we'd do is look more broadly about VAT as a topic, because it's not a straightforward tax, is it, Andrew? It's quite complicated.
In my opinion, Dan, it's probably the most complicated of all the taxes. I mean, whether the members are self-employed, whether they're limited companies, basically the rules and the framework around those are quite easy to grasp. Yeah. But VAT has got so many little niches, nuances to it that it makes it very complicated.
Yeah. So why don't we kick off talking about that in a moment? If you've got any questions and queries about any of the things we're talking about, then feel free to write them in the comments box. If you're watching live on Facebook or YouTube, then write them down. We can endeavour to try and answer those. If we can't get around to those today, then you can email them in, opinion@ncas.org.uk. But I'm aware, though, Andrew, a lot of people are going to have quite particular needs, aren't they, and quite specific questions. And therefore, it's not straightforward that all their answers can be given to everybody.
Well, the thing is with VAT, there can be, as you say, so many little turns in the way they do their business. They might be out on the road, they might have premises, they might sell hot food, they might sell cold food, they might sell alcohol, and all those have got different VAT implications. So what I recommend to your members, stick your questions in the chat box. We will guarantee to answer all of them, but probably by private email. We'll cover general topics in this webinar, but specifics, I think it's probably best done by private email.
Great. So let's kick things off. Let's go really back to basics with VAT. And apologies if I say apologies. I don't make any apologies for you guys out there. If you know a bit about VAT, you might find something interesting. You might learn something new. But let's go right back to basics, Andrew. VAT. What is it? Who is it? Why is it? Tell us about VAT.
Very good question, because I might have mentioned earlier, the most common area where people in small business get picked up on by the revenue is VAT. It's not income tax, it's not corporation tax, misdemeanors, it's VAT. And they regularly inspect. And I put a blog out about a couple of years ago, Dan, because we got wind of it at the Catering Accounting Company, that the catering sector was being targeted by HMRC. And because we're cash businesses in the main, they love to hit cash businesses. So we need to get it right. We need to be mindful. But to answer
because a lot of businesses, were they targeting hospitality because there was significant fraud?
Yeah, significant opportunity for fraud. The revenue always look at things on a risk basis, and they reckon, what is the opportunity out there for people to fiddle their VAT or to fiddle their tax? And they reckon that if there's cash involved, there's an opportunity. So therefore, they look at things like margins and profit margins, people who fail to register on time. So let's go back to the basics. VAT is a sales tax, basically, and it is a levy that you charge on top of the net price that you want to charge for a cup of coffee. So say your cup of coffee is £100, a pound, then you would add 20% because that's the rate of VAT currently before we look at the concessions the government's just made.
Yep.
So you charge that coffee at £101.20.
Yeah, because VAT before this and for most other industries is 20%.
Correct. Yeah. Now, one of the most common errors that people make with VAT is not registering when they should register.
Because not everybody has to register, do they, Andrew? It's only if you're turning over £85,000 or more, right?
Correct. But that £85,000 or more has to be monitored on a rolling basis. So let me give you an example. We're coming up to the end of July. And if your turnover on an annual basis is around the 80,000 mark, you obviously know that you're close to the threshold. So you would have to consider your sales from the 1st of August 2019 through to the 31st of July 2020 to see whether you exceeded that 85,000.
Okay, so it's not just to do with your financial year, it's your
financial year indeed. And that's where a lot of people go wrong because they look at their last set of accounts. Oh, I turn over 60,000. I don't need to register. But if subsequently your turnover has increased so that on an annual basis, starting with the month following the end of the month you're in, so as I say, July, looking from the 1st of August 19 through to the 31st of July 20, if you exceeded 85,000, you need to register.
Yeah, but and registering for a lot of small businesses, hospitality business in particular, is a real problem, isn't it? Because you obviously when you're VAT registered, you have to charge your customer VAT, but the benefit of being VAT registered is you then get to claim back any VAT on any purchases you made, haven't you? But particularly that's a real problem for hospitality businesses because they don't pay VAT on a lot of their food items, but then they still have to charge it to their customers, don't they? So they take the hit even if they are VAT registered.
Absolutely spot on. And many find, Dan, that because they're in a very price-sensitive market, they find it suddenly difficult for that cup of coffee that they were selling for £2 last month to suddenly sell it for £2.40 and still keep their customers. Because
or you have to just take the hit in your margin, don't you? Or
you lose your margin. Yeah. That's my point. And that's what most of them end up doing. They don't add up on the price because the customers who know them well and know them regularly don't want to see that 20% hike in price in one go, which is what the customer pays.
And so what we find is in order to push through that and get over that, you need to increase your sales significantly. So go from maybe you're doing 80,000 and really to make that difference up, you need to push through that boundary quite a lot and get your sales up to 120, 130, 140,000 to make up for that shortfall, don't you? Do you find that?
Yeah, indeed. And the other thing to bear in mind is that there is now, under the new rules anyway, there's 4 rates of VAT to be mindful of. So we've got the standard rate of VAT, 20%. Yeah. We've got the reduced rate, which the Chancellor, as you just said, announced last week, of 5%. We've got 0 rate VAT. And although there's no VAT, it's still a rate of VAT. And then you've got exempt. So it's such a complicated area because what am I selling? Which one of those does it fit into?
Right. Well, let's try and tackle this because there is a lot of confusion over this as well, particularly for takeaways and for hot food. What is 20% and now 5%? Well, we can talk about what's standard and we can come back onto the 5%. Let's talk about prior to this, right? First, and we'll go on to move on to the future. So prior to all this, how was it all rated?
Right. I think the concept is what I need to get across here. If when you're selling food, you had to provide a service to it, like cooking it, like heating it up, right? That generally is taxed or was taxed at 20%. If you were selling cold food, like cold sandwiches, then that was 0 rated, not exempt, 0 rated. Okay, so that was broadly the principles when you were just selling food. If, however, you are, let's say, you're a McDonald's or a takeaway place like that, right? If people eat in, then the rate of tax applying to that was 20%, because what the government was saying there is they're providing a service. They're not only selling you food, but they're letting you use their dining facilities. So they're serving you, they're providing you with a service. If, however, you take it away and it was cold, that was zero rated. So that's why it's so complicated.
So complicated and ridiculous.
The thing for NCAS members is you're going to have to get a pretty sexy till to account for all of this, because you could potentially have 20% rate, 5% rate, zero rate. How are you going to record your sales to make sure you comply with the record keeping required by HMRC?
But let's just be really clear. Unless you have a turnover of £85,000,
forget it. Forget it all. Forget it all.
It doesn't make this 20% VAT cut doesn't make any difference to you whatsoever, does it? No difference.
Occasionally, Dan, I do get clients who want to register voluntarily. So if your turnover is below the 85,000, some people say, Andrew, I want to register anyway. Why might they want to do that? Maybe they're going to buy a couple of new capital items, such as a new cooker and a new fridge, or a new unit, which could cost them £20,000 or £30,000, or they're going to renovate their unit. If they're going to do that, they're going to incur a significant amount of input VAT. And
as in the VAT that they purchase when
on that goods, yeah. So yeah, I should have explained that, Dan. I'm using a bit of accounts jargon there.
Yeah, no, it's okay. It's my job to turn it into everyday language, Andrew. Don't worry about it.
Inputs and outputs. So just to get your members clear on that, an output is the VAT that you pay on your sales, and an input is the VAT that you incur on your purchases. And obviously, if you're going to buy a lot of capital equipment, like a new trailer and kit it out, you can be spending a lot of money. And a lot of that could be on the bills that you're paying to acquire that equipment. So sometimes
you're buying a new trailer, it's going to cost you 20 grand. You've got to pay 20% on that, which is 4 grand. So you might go, well, actually, I might be better off VAT registering, so I can claim that £4,000 back.
And indeed, if you're going to buy a van to tow your trailer, the van would have probably VAT on it. So those circumstances, people sometimes say to me, Andrew, what do you think? And I say, well, if you're going to spend capital money every year or every other year, you might be better off registering.
Yeah. But
so register,
then, can I register? I know what a lot of members are thinking already is, can I register for 1 year and then deregister the following year?
You can, but if you do that, you've got to pay back the input VAT that you reclaimed when you were registered. So it doesn't really work.
Right.
That way. So
sorry, everybody. Sorry, I knew you were thinking it.
But doesn't work that way. No.
Right. So let's go back then. So 85,000. This doesn't apply to you really. You can switch off, but you know it's useful for you to know in case you ever want to go through the VAT threshold. In case your sales have been really high and you're going to push through. Vast majority of members will be doing hot food and therefore is standard rated.
Correct.
If you're doing cold food, then that is 0 rated, you said.
Correct.
But cold food on site, so that's just to clarify, cold food
in a restaurant
is standard rated, but cold food off site is 0 rated. Am I correct?
Yeah, you got that. Well done.
Okay, good. So I'm classic. Well, I'm doing burgers. I'm doing it from a cafe, right? And therefore that is standard rated 20% prior to all this.
Yes.
Right. Yeah. Coffee, right? This is a little quiz now. You can do me coffee, 20%. I'm guessing takeaway coffee, 20% standard rated.
Correct. Heated food, basically.
Muffins, right? Which you eat in your eat in your cafe, or then that is 20%.
Yep.
Muffins takeaway.
Are they cold?
They're cold.
0 rated.
0 rated, right? And this is the whole thing, isn't it? This was the Greg's.
And the reason I'm happy to answer anybody's questions, as I said, and I'm going to answer them individually because of the complexity. Because what if you just heat something up? And there are special rules around all of that, whether it's just a heated product, or maybe you cooked a sausage roll in the morning at Greg's, and then by the time the customer came to get it, it was cold. How do you treat that? So
that was the big debate, wasn't it? That Greggs took HMRC to court, wasn't it, about the pasty tax, and they managed to get it so that if it was, that's why when you go into Greggs, if you get it out of the oven hot, then that's great, but you can't. They won't reheat it for you, otherwise they have to.
If they reheat it, they've got to charge you the 20%. And there are some clearly defined rules at HMRC and guidance that they've come out with. So if anybody wants to come up with any questions like that, tell us the exact circumstances that your business is facing. We'll be able to answer you.
You're a good lad, aren't you, Andrew? You're such a nice bloke.
Try our best, Dan. Try our best.
Yes. Right. So I think we're clear. Standard rate, hot food. Cold food on site is VATable, standard rate. Cold food off site is not VATable. Clear? Is that I'm right?
Yep. You're okay.
Any exemptions?
Any exempt VAT?
No, exemptions is the wrong word. Any kind of things in there which?
Yeah. Okay. So let's talk about what they call comes under the heading of confectionery. So that sort of crisps. Chocolate, ice creams, if you do ice creams for your kiosk, they, under the old rules, are always 20%. So they're sort of like the sexier type of product that you might be selling, attracts the standard rate of that. Yeah. So is there anything else we need to talk about, the broad thing about VAT, before we come into the cut then and what that means? Well, just a couple of other things for members, because I've seen some businesses like to use what we call as the flat rate scheme. Mm-hmm. So the flat rate scheme means there's a whole simplification of the way you have to account for VAT. And basically, you just apply a percentage to your turnover. So you don't really bother about what you bought. You just get your sales figure and apply a fixed percentage to that, which is less than the 20%, because it's meant to average things out and take account of the purchases that you're likely to have made. And if you buy any big capital items, you can still claim the VAT back on those, but it just makes the whole VAT accounting so much easier. But your business has to turn over 150,000 or less to qualify for the fixed rate scheme. The other thing is, and I'll finish with the technicalities after this one, if your business turns over less than 1.35 million, I think it is, then you account for that, or you can account for that on what we call cash accounting. Now, what cash accounting means, you account for it when you receive the money coming in, which most of yours will be on the day, but most of our members will be on the day because they're cash businesses, and you can claim that only when you pay the bill. So go back to our little scenario about the guy buying his van. If he doesn't pay the bill till 30 or 60 days, he has to wait till that time before he can reclaim the VAT on it.
So it has cash flow implications.
Yeah. The alternative is standard accounting, which is when you can claim the VAT back as soon as you receive the bill, not when you pay it.
Before we move on, I've had a couple of messages come in from people just wanting to clarify it. So Becky Valance, she's messaging and she said she's serving cold food, chocolate brownies at events. Should the events team charge me VAT on top of our percentage of takings? So I'm presuming by what that Becky means is she's been charged
a fee based on her takings. Would be probably, Becky, yes, they should charge you VAT on that, because what you supply, I don't think the charge they're making to you is like a rent. Basically. And I don't think what you sell would probably determine the VAT rate to be applied to that rent. But Becky could obviously claim back that VAT that she's being charged at 20%, couldn't she? So as long as she's VAT registered,
As long as she's VAT registered, So just before we move on, then VAT registration, just to be really clear on that, it's just about simply notifying the VAT man that you are turning over a certain amount, and therefore you're going to be claiming VAT back, and you're going to be claiming you're going to be charging customers VAT, and therefore you have to do a quarterly VAT return. Is that right, or is it an annual?
You can do an annual these days if you're a small business, but most of my clients in the catering sector, we do them quarterly. because they don't want a big shock at the end of the year. They like to keep it ticking over so they know their liabilities on a regular basis and get it paid. Get it paid.
And it really hurts, doesn't it? It hurts a lot of independents because it is a big chunk of cash. And so it is about making sure that you have to set aside that cash. If you are VAT registered, it's not, you do have to pay that bill, don't you? You really have to put that aside to make sure that it doesn't come as a big bill whenever it comes.
Give you an example on that. You've made a really good point there, Dan. Let's say in a normal summer, there was, we're in July, we're in the cricket season. So you attend as a caterer 2 test matches, let's say, and you have big takings at those test matches. And we're in July, and your VAT quarter is the end of September. So you've got your takings for July, August, and September. That would make up that VAT period. You had a bumper July, you go on holiday in August and spend all the money that you took in the July takings because you've gone abroad for your holiday. The VAT liability that you earned in July is payable on the 7th of October. So when you make the point there that you've got to put money aside to meet this liability, you're so true. Absolutely true. Because it's very tempting to say, oh, I've got 20 grand in my bank, I'll go and spend it. But then you've got to accrue that VAT liability.
Yep, absolutely. Buenos Burritos. I've cooked a load of food for the NHS. Great. I hope you got that job through us, through Meals for the NHS. He's saying, but it was chilled for delivery later in the day. So was VAT applicable on that? So he cooked it at home, delivered it.
The first point with that is he has obviously sold that before the changes that the government have brought in. Yeah, because they only brought them in last week.
Yeah. So the question is it standard rate or is that 0 rated? Presumably, if it's
well, he's provided a service to it by chilling it. Was it ice cream again?
No. This would have been hot food meals. This would have been, I don't know, some chili, for example, or burritos. Right? The example's in his name. So it would have been burritos. He's cooked them, and then they're just cooling down, and he's delivered them to the hospital for them to eat. Presumably, that's hot food takeaway. That is standard rate.
Correct.
Yeah. Sorry, guys, that's standard rate, 20%. But if you're VAT registered, obviously you get to claim that back.
So that again, that last bit, I think we might be misleading there. Just say you last.
Standard rated, so he has to charge that the 20% to the. But then, sorry, he gets to claim his 20% back that he's had to pay out on the food items he's had to buy, hasn't he?
So any food which has got VAT on it, he would be able to claim that back. Yeah,
but only on the ingredients in it, which is why a lot of people get
ingredients will probably be 0 rated.
Yeah, if you think about the ingredients in a burrito, what you're talking about, mincemeat and breads,
0 rated, all of that.
Yeah, but for this kind of example now, when we come on to then the VAT cut, this is why it's such a big help, though, isn't it? It would only be 5% that he's going to have to pay.
So should we talk about that?
Yeah, let's move on to it. Yeah, so.
Okay.
Go on.
Yeah. So basically, from the 15th of July, the government have introduced this new rate of VAT. It's a temporary rate, and it's 5%. And it relates to periods from the 15th of July, just gone, through to the 12th of January 2021. So it's basically a 6-month period that they're introducing this new rate for. And it's really aimed, as we said at the start of this webinar, to give a bit of a boost to the hospitality, catering, and actually holiday accommodation sectors, because it's not only applying to the catering sector, there are other sectors that they're rolling it out to.
Yeah.
So what can we apply this new 5% rate to? Well, it's basically the supply of food and drink, in brackets, not alcoholic drinks. So it's got to be soft drinks, tea, coffee, that kind of thing, squash, I guess, for the consumption on the business premises. That's the first thing. So it's the supply of food and drink on the business premises, such as cafes, pubs, bars, blah, blah, blah. Yep. And then also the supply of hot takeaway food and hot non-alcoholic drinks also is eligible for the 5% rate.
So cold drinks, I suppose they're exempt anyway, aren't they? If they're on site, then they're 20%, and you get that back. But if they're off site, then they're exempt anyway. Is that what we're saying?
Correct. Yeah.
Yeah.
Right. So,
yeah.
Just to illustrate that, I've got a couple of examples, and they may resonate with some of our members. Yep.
Yeah.
So I'm going to have to read this because I've written it down in some notes just in preparation for this webinar. So imagine Fred. He goes into Jim's licensed cafe, right? So it's licensed. So I'm picking out the points as I go through this. And he wants a takeaway snack. So he goes in the cafe and he buys his takeaway, which includes a cheese and tomato sandwich,
yeah,
a bottle of beer,
yeah,
and a latte.
Yeah.
Right?
I can picture it now. This is me. I've gone in, cheese and tomato sandwich, a bottle of beer and a latte. Great combination. Yeah, yeah.
It's good for tax purposes and illustration. Yeah.
Yeah, okay, yeah.
So, and he asked the man behind the counter, he asked Jim for a VAT receipt.
Yeah.
Because he's away on business and is looking to reclaim the VAT from his business meal, basically.
Yeah.
So, first of all, the sandwich is 0 rated.
Yeah, cold food takeaway.
And it's takeaway. Yep. The latte would have been standard rated because it's
20%.
Yep.
Yeah.
But now, under the new rules, it's 5%.
Yeah.
The beer, you answered down the beer.
Yeah. The beer is 20% because that is not included in this VAT cut.
Correct. So that illustrates the 3 types of sales quite nicely, in my opinion. The only other thing that I need to say about that is, which I said at the start of this session, the guy who's running that gym, that cafe, Jim, he's going to have a very good till because he's got to account for 3 different rates of VAT on that transaction.
Yeah. Andrew, just to clarify, somebody, cold drinks VAT exempt or not?
Not exempt, 0 rated.
Can of pop, yeah, exempt, 0 rated, yeah. Can of pop.
Can of pop. I think can of pop is standard rated.
Right, can of pop is standard rated.
Because it comes on the rate.
Right, right. Whereas you said you gave the example to me previously when we're off screen as saying a milkshake. Would the milkshake be?
I'd have to check it, a milkshake.
Right.
Because again, there's a bit of a process that's got into it. But
this is the complication, isn't it? It's a bit of a nightmare.
Yeah, there are VAT guidelines out there, but I will answer that question and put it across to you guys and Cass to send out to your members.
But bit of a correction, we said it's 20% as 0 rated for cold drinks. Doesn't sound like it is. It's my mistake on that.
Sorry. Well, yeah, a cold drink would, if you were buying a squash, an orange squash or something like that, that would be 0 rated.
Yeah.
So again, it's very technical and difficult.
But the point of what you're making earlier on is that you could have in one sale 3 different types of VAT.
Yeah. Now I'm going to take that one level further. Right. That same example that I've given you, a bottle of beer, a latte, your cheese and tomato sandwich. I'm now going to throw in some crisps because you want a packet of crisps, don't you, Dan? You love your crisps. And I'm going to add in some fish and chips.
Right.
So there, what I've done there is I've added in some confectionery, crisps, and I've added in fish and chips, which is some hot food.
Yeah.
In a pub or a restaurant, 4 out of 5 of those attract the 5% new VAT rate.
Standard rating, yeah.
The 5%, yep. Which would be the latte, the cheese and tomato sandwich, the crisps, and the fish and chips.
Yeah.
The only one that would still qualify for the full rate of VAT would be the bottle of beer.
Yeah.
Alcohol.
Yeah.
If you were a takeaway, which many of your members and listeners to this webinar will be, the crisps will still be at 20%. For a takeaway.
Why?
Because it's only when you consume the stuff on the premises that you can get this 5% rate.
Right. So it's only hot food takeaway that's 5%. Cold that is standard rated is still at 20%.
from a takeaway situation.
From a takeaway, yeah.
Yes.
Cold food that is standard rated from a takeaway is still 20%. So if I'm a cafe and somebody's doing...
No, we're wrong there, Dan. I've got to be clear on this. Cold food, wherever, is 0 rated. Right. But crisps are confectionery.
Okay.
Why I'm making the distinction. Yep. So with the takeaway, the crisps are 20%, as well as any other confectionery items that you might be selling as takeaway.
Right. Okay, so that's a very minor thing then, really, isn't it? It's just the idea that any confectionery, I suppose that's to make sure that news agents and the like, they're not dragged into this. This isn't to help support them, is it? This is to help support catering. And therefore, it's kind of that value add that they might do in terms of preparing the food and serving it.
So just to clarify that, the difference is on the crisps, because hot and cold food eaten on site, you get 5%, but only when you're taking it away, takeaway sales, it's got to be charged at 20%.
Right. Obviously, the vast majority of members, then they're... So what we're saying then is something like a Mars bar as well. So if you're selling a Mars bar, that is still got to be at the 20% as a takeaway, but 5% if you're eating it on site.
Still not, yeah. If you can, maybe you put Mars bars in with your ice cream. Or a flake, a 99 or something like that. Then if we taken on site, it would be 5%.
This sounds like a really complex situation, Andrew.
It is.
Really complex. How the heck is an independent guy supposed to, sorry, guy or girl, forgive me, I didn't mean I use it in the broader sense. How is an independent caterer supposed to cope with all these different rates of VAT?
I can absolutely guarantee to you, Dan, that when they brought this in, they had no idea of the complexity of what they were trying to do it with all good intentions to support the industry, to support the sector. But when you actually drill down into the legislation, you find how complicated it is, and practically how are people going to account for this.
Honestly, what is the way that somebody would do it? What's a way to make this practically a lot easier and not just an absolute ball ache, which it sounds like it could potentially be?
Well, your inputs are going to be easy because it'll be on sorry, I'm using jargon again. The VAT that you're incurring on your purchases, which we call inputs, will be easy because that will be documented on your till receipt that you get, whether you go to Tesco or whether you go to Booker's, the people that you support. I don't, that will be easy. It's only going to be on your outputs it's going to be difficult. And Dan, I haven't got an answer to that. It is going to be difficult.
Yeah.
But I think if you break it down, because you're either basically you've got a cafe or restaurant which you're selling on the premises, or you're a mobile one. And I think what we could do between you and I, NCAS and the Catering Accounting Company, is probably put a document out for people who are in a restaurant cafe situation and people who are outside caterers, event caterers, because I think that would help them explain what they've got to do regarding their VAT.
Sounds good.
Yeah, I think that, because we're trying to, in this webinar, get across two situations: a restaurant and a outside
takeaway. It's two different things, really, isn't it? It sounds like it's a lot more. Yeah, two different sets of rules, isn't it? Depending on whether you eat in or eat out.
Yeah.
But the key thing is, the main thing is if you sell in hot food, your VAT bill goes from 20% on virtually every product down to 5%, which in terms of cash flow, that really helps them. So rather than having to put aside 20% of the sale, they now only have to put aside 5% of the sale for their VAT bill.
Indeed. And the other point, Dan, to make is that I do a lot of business coaching, and one of the areas that we're key to encourage the people who come on to the coaching is the benefit of making good margin on your product, because good margin flows down in your profit loss account to net profit at the end of the day. And in many cases, it's better to sell less at a higher price than sell vast volumes at a lower price. So if you can, as a member, leave your prices where they are and you keep the profit or the extra 15%.
Yeah, and it's a question we're being asked a lot at the moment is, should I cut my price or should I keep my prices the same? The answer for me, I mean, is it always depends on, do you think you're going to sell significantly more by cutting your price? If you do, and therefore you can make more profit, then that might well be worth it. Or, you know, somebody like McDonald's, they're going to cut it because they're incentivized to, because the light of the world is on them. And so from a PR perspective, it makes sense. For small independents, this is a great opportunity to, you know, let's be honest, who's going to say, insist on not buy a coffee because it's £2.20 instead of £1.90 now instead? It's a great way to boost your profits and therefore make some extra margin in this period, would you say?
I would agree entirely. I mean, if you're an event caterer and say you did I don't know, an antiques fair last year, nobody's going to remember whether you were selling your coffee at £2.50 or £2.30 or whatever. So just because you're getting a bit more profit because of that rate's come down, nobody's going to say, oh, you dropped your prices from last year and yet you're not paying so much VAT. Nobody's going to know that. Yeah,
so for event caterers, it's different, isn't it? But for fixed site caterers, or somebody's in a regular spot or a roadside caterer, you know, people might come up to them and say, oh, why are you not charging less for the VAT cut? Why are you still charging the same? You think people are well within their rights to say, I haven't worked for 6 months or 4 months, or, you know, I've been really struggling. This is a thing which is being done to help support independent caterers and the catering world and hospitality. That's my price.
I would agree. I would stick. I'll say one other thing as well, and this is part of the coaching that I do. If you never get any price queries, you're too cheap, because you should always expect some. If I've done a seminar on like optimum pricing and stuff like that, and unless the fact of the matter is, unless somebody questions your prices, you are too cheap. If everybody's just paying it, you could go higher. And what you want to try and find is that optimum selling price, which is at the top of the curve like that. And at that level, you'll be making the most amount of profit.
Yeah. Time's ticking on, Andrew. Is there anything else we need to think about in terms of VAT? Is there anything else that we've missed that you think members need to know about VAT and about the cut on this webinar?
Well, I can see there's lots of questions coming in, which is absolutely great. And as I promised to people at the start of the webinar, we will respond to each and every one of them. If you give us 48 hours, you will get a response.
Should we go through a couple of those, Andrew, now? So
what I have noticed, somebody's asked about the flat rate scheme. It's flipped through now. I can't see the person concerned. Oh, it's Ricky, who's at the bottom of my screen right
Ricky,
now. Yeah, Ricky says, I'm on the flat rate scheme for VAT from July. Do I pay the HMRC 5% or still the flat rate? And there has, Ricky, been some guidance put out by the government on that already. And what they're going to do, as I understand it at the moment, is they're going to reduce your flat rate. What you can't do, or it would be really messy to do, is to come off the flat rate now and then go back on it in a year's time. What I believe they're going to do is, say you're paying at 15% or 12%, whatever your flat rate is, I think the government are going to adjust those percentages downwards to reflect this concession that they've just made. So I hope, Ricky, that answers your question.
Any idea what that level will be, or when will they know?
No, they haven't even released the guidance, Dan. I was looking at stuff this morning in preparation for today's webinar, and they're saying they're going to publish it shortly.
Yep. Pam Pimlott, we sell hot food at farmers market as well as fresh meat. What rate is our hot food to be sold at now? Presumably that's the new 5%.
Yeah.
Yep, 5%. So Pat, you can either choose to cut your price or keep the price the same and not pay as much VAT. Remember, though, it's only if your turnover is less than £85,000. Over £85,000 and therefore a VAT registered.
There's another one there that's from. That was one you were going. Somebody was talking about food at catering event. Crocus World. How about catering for private events? In my opinion, there, Crocus World, you're still at standard rate, because there is a little piece in the legislation that says any supplies of food and drink that are supplied as part of a supply of catering services for consumption off your premises or off the premises remains at standard rate.
Right. So a private party where you're billing for the whole thing.
Yeah, it's still at standard rate.
Is there a way, could they just say, right, we're going to sell 100 burgers and do that at, I don't know, a set price in advance? Is there, I'm just thinking if there's a
I have the
accounting way to make that.
Well, okay, I'm going to tell you about somebody who came on to me, one of your members last week, or one of our members last week. And this lady provides for parties and events. And it's usually when somebody has hired a venue, and she goes into that venue, uses their facilities to cook and prepare the food, and supplies it. Now, on the one hand, it's not on her premises, so that technically could be standard rated. But on the other hand, it is at some premises, and so could be at 5%. And what I said to that lady is, I'm going to go to HMRC for her and get a ruling, because the guidance conflicts, it's contradictory. So people, that might apply to a number of the questions on here. That I suggest what we do is, if we've got some real techie questions, we write to HMRC on their behalf and get a ruling.
Yeah. Yeah. Just having a quick look. Any other questions that we need to cover through? Right.
I can answer one. Shall we make this the last one, Dan? Because it's a good one.
Ricky King, yeah. He says, I'm delivering lunch into the workplace, prep sandwiches ordered by the web to employees. It's part of a meal deal which has a canned drink and crisps. How do I account for that? So this guy's got all sorts of different things going on.
Yeah, well, okay. Where it's part of a meal deal, Ricky, you're selling looks like a can of Coke or something like that, and crisps. Well, that's confectionery, as I mentioned. So normally that would have been at 20%, and perhaps a cold sandwich. So where you've got that kind of situation, you have to, and you give a discount where items can be purchased individually or as a bulk discount, and you offer a discount, you have to apply that discount to each of the products that make up your bulk deal in proportion.
Right? Say that again, Andrew, just to be really clear.
It is a technical one, this one. But say you're supplying a sandwich at £2, a can of Coke at £1, and a packet of crisps at 50p. So that would be that would be £3.50. Say you're selling it for £3 as a bulk purchase. Yep. You would then reduce those prices by the percent, each of the prices for each of those individual products by the same percentage, and work out the VAT on that basis.
Yep. This all sounds, like you said right at the beginning, extremely complicated.
Yeah. And if anybody needs any help and support, obviously speak to NCAS. And if we can help as accountants, we will do. I think there's going to be a lot of questions coming through over the coming weeks when each of people finds different circumstances that they're facing, and we will do our very best to help them. Yeah,
and hopefully you can all tell from Andrew and how he comes across on these webinars. The Catering Counter Company, we partner with them because really good bunch of guys. So strong recommendation to if you need some help, either just in terms of this, but also an accounting practice moving forward to help make your accountancy a lot easier. Then they've got a full range of services and do provide a discount for NCAS members, don't you, Andrew?
20%.
Yeah.
So we work with a lot of caterers, and so that's how we've got a bit of a insight knowledge into the sector and the industries and the problems you guys come up against.
Yeah. Andrew, we're out of time. Thank you very much for that. Really insightful. We really hope that you found that useful. Lots and lots of information wrapped in there in terms that will help you get through this. Maybe we've made it a little bit, well, hopefully we've made it a little bit clearer for you now, and hopefully you can benefit from the VAT reduction. Make sure, if you found this useful, please make sure you like the video on Facebook or on YouTube. If you're on YouTube, then subscribe to our channel. We do these webinars on a weekly basis. We're trying to do this to really help members get through this coronavirus pandemic. It's not just a crisis in terms of health. It's also a crisis in terms of the economy, and so we're desperate to try to do everything that we can to support you through this. Thanks very much again. Thank you, Andrew.
My pleasure. If we need to follow it up because there's so many questions, I'm sure we'll do that.
Yep. You can send them through to opinions@ncas.org.uk. Thanks. All the best. Bye-bye.
Take care.